Yo, this is looking very nice, man. 1 minute until GBP interest rates. What do you see? It seems that they supposedly gonna reduce it, right? And that would actually put, oh my god, we're almost there. But yeah, a little small push into the liquidity, that would be awesome, right? I'm gonna go over the news factor in a bit. But hey, man, look at this shit. I could cut it right here, but we holding it. We holding it. We ain't no bitches, bro. We already at break even, and so just let it do what it's supposed to do. I was risking $200 something, and the TP is 600. Let's see. Let's see what it does. 2-1. Come on, come on, come on, come on, come on, come on. It's going a bit down. It's going a bit down, but it still has the strength. Come on, come on, come on, come on, come on, come on, come on! Come on, that's what I'm talking about, man! Yes, sir. Yes, sir. Yes, sir! Stop playing with me, man. I know this shit. I know this shit, okay? You see the liquidity? That's where the price is going. All right, let me chill out. Quick 600, quick 600. Let me show you. Let me show you because you haven't seen it, yeah? All right, look. Look, can you tell? Can you tell? You can probably tell, but a little bit for the haters, you know, right here. You see that? All right. Okay, so how did I knew? Right. Most importantly, I already told you. You got to know where the liquidity lies, right? And this was a risky position. This not even because of the news itself, but because of the setup. And I'm gonna explain to you why in a sec. But I know the bias is overall bullish because yeah, not only did we sweep liquidity here, I think we didn't, but yeah, but we're right here, and I don't even need to be on the hourly on the 4 hour. I just need to be on the 1 hour. You can see this as a clear trap. Like, what did this high do? It didn't take no liquidity apart from these inducements, these weekly highs, but it's nothing, right? It's nothing. It's nothing. It didn't come to mitigate this zone. If you were to look at it, right? If you were to mark inefficiency right here. So it didn't do nothing. It didn't take no liquidity. It made this massive drop. And people might be looking to short by here. So we're already giving them some incentivizing to go to the downside. But that's on the higher time frames. On lower time frames, what I can see is that people might not even zoom out that much. The SMC traders might just be seeing a sweep of Asia and immediately try to short here, anticipating this retracement, which could be valid. I could see price going here for news and then head higher, right? And I was also expecting price for sweep this and then the news to go lower. That could also happen. But the way you anticipate news, the way you can tell where price is going is know where does the liquidity lie. Like, there's two ways you can predict news. There could be the first way, where price is kind of in the middle of nowhere and there's a huge liquidity on one direction, so price will most likely go there. And then there's the second option, which is way better to place yourself, is we'll sweep a major liquidity just before news hits, and then we'll run the opposite direction, right? If right now price was here and news was in a few minutes, price will most likely do this, right? And it's just look, I don't even know the results yet, and news are just setup accelerators, right? It ended up being the actual forecast, right? But if you're lowering the interest rate, sorry, then you're making the currency less valuable. But the price is saying otherwise, right? If you're making the currency less valuable, you're supposed to for GU to go down, but the price is telling you otherwise to trap everyone, because the price action won't really care. right? It's just setup accelerators. Doesn't matter what the data actually says. Well, it does matter on more of mid long term, right? But on the day itself, on lower time frames, it's all about liquidity, right? Even if like this data says the price is going down, it's actually going up. But maybe just because everyone's anticipating the shorts, and right now we're taking them by this huge move, and now we're actually going to do the move down, right? Because people might still have the same bias of, okay, because of this cut on interest rates, price is going to go down. But now after seeing this huge move, do they place themselves, right? It's a question. But what I was telling you about is that people don't zoom out here, and they might get shorts of London. But there's a super internal risky setup I sometimes adopt, that instead of the price taking major liquidity, which would be this one in this case, and then trying to short, you buy in order to search for that liquidity. Okay? So the most quality setups, the best higher probability setups, sorry for my English, are those where the major liquidity gets taken and then you look to trade the opposite movement. In this case, it will be short. But then there's risky setups where you know there's a major liquidity just above in this case, and you look for some liquidities to get taken, some internal ones, in order to look for price to buy. Because price ain't doing a lot of retracement around here. That's why I also had this line drawn, because it was a good one to see price maybe stay here, take this, and then making equal highs, sweeping liquidity downwards, making efficiency right here with this level, and then buy it. That would be a clean setup. That would be a way more cleaner setup. But this one was super internal because I knew there was a high probability of price just going up from here, especially during news. And news, it just set up accelerators, so price will just move towards the liquidity already immediately, right? And so the super internal risky setup is, you guys know I trade smart money traps. And so as we sweep Asia, there's a lot of people that trade the Asia sweep strategy, right? They look for Asia highs to get swept or Asia lows to get swept, and then they buy or short accordingly, right? They trade the opposite move from it. So as soon as people see this London getting sweep and they see this breaker structure change character right here, they'll try to short this move, right? Not zooming out and seeing that there's this major liquidity right here. But even if there wasn't, even if their price was in good highs, sweeping good liquidity, the major liquidity was right here, for example, and we sweep Asia, we did a change of character in London, right? People will still be looking to short either way. What I noticed from some of these setups, and I noticed because you gotta always anticipate for a second sweep, and a second sweep is a smart money trap. Because the Asia right here, my trap support resistance traders, it's session liquidity, so it always look towards taking that. And the second sweep is to trap smart money traders. So right here, maybe some traders got out, but they're still the smart money traders, and they're still the support resistance traders that are more on a higher time frame that's trying to short this resistance. That's our major liquidity. That's our target, right? So we always looking for everyone to be taken out and then place ourselves. But in this scenario, it's more like we trading the move that's going to take people out, right? So as they're all trying to short it here, and instead of me, this is the safe setup, is me waiting for them to get taken out and then short. But you can also have this internal setup, which I don't really advise, but I'm gonna show you guys, is to look for the short itself, for the trap itself, right? So high probability is after the trap is executed, and internal risky is looking for the trap to be executed, right? And so we have a sweep of this level. So as you know, price is always going from one inducement to the other. It's doing this, right? So it's the same structure. And yeah, because we had the sweep of this, so some people might be trying to long here. Smart money traders are trying to play the continuation move, but this is in the middle of nowhere, so it wouldn't work. There's a sweep, and then there's a second sweep towards this inducement, which still Bit risky, yeah. I would assume the whole thing is risky, not just excluding the news even. But yeah, as we got that, I place myself after this change of character right here, maybe on the M3, M5. Yep, was probably this M3 candle or this M5 candle. This M5, yeah. Because I normally like to stay on M5, even though I'm probably trading M1 structure most of the times, but I can just see how the structure looks just by the candles. So yeah, the internal setup, it's basically that. It was just uh, anticipating the smart money trap that was gonna take people out on the highs of London, because I can assume that this high won't be the high that's valued short yet. And this one can probably be, but not on this scenario, because right now we're in New York trap timing. New York is not even open yet. Oh, wait, it is open yet. It is open already, but it's just now, and I'm still gonna have to wait for a setup to form here in order to wait for the shorts. Because right now we also had this first sweep of liquidity on this major liquidity right here. So right now we gotta wait for a second sweep. And the second sweep, it might actually come now, as you got this huge rejection from this level. People already are trying to short. Price is gonna do one more and then go low. But I gotta go have lunch. But yeah, guys, it is a risky one. But as you know, a lot of people trade Asia session. So just imagine this as Asia. You have price sweep minutes trying to short here as breaker structure and perhaps buy right here. This is the risky one. Right, I'm with R, looking for the buys, and then as we take all the people that was trying to short this Asia sweep London high that swept the Asia session, you actually short right here, and then you get the move, and this will be your safe setup. That will bring you the dollars, right? But yeah, you gotta be aware that this the strategy itself, my strategy has like 40% win rate. All right, but if you know about trading, if you know anything, you know that's win rate plus risk reward. Okay, both complement each other, and then you add both together, and you have the equation of whether you're profitable or not. It doesn't mean because someone has a low win rate or high win rate that they're profitable, right? You got to look at win rate and risk reward, because 40% win rate, but I covered that with the 3R, right? And if you know how to do some maths, you know that's profitable. And if you have some overall experience, right? You don't need to have a 95% win rate. That's all bullshit, right? The trader that's doing that is most probably going to go for a negative risk reward, which all it takes is one trade to wipe all his gains out on one loser trade. That's what I mean. But yeah, keep in mind that these will give you a lot less of a win rate. They're a lot more risky because of the overall zones, and the setup is not even completed yet because people aren't out of the trade, but you're anticipating them to be. This is ultra advanced, but it's for the people that I know trade exactly like me, and they're looking to get on this level. It's a type of setup to look at, but yeah, as you can see, it's internal because it's middle load zone. No major liquidity is being swept, and you're entering a trade. Right, be careful with these. Backtest them a lot, of course. Also prepare yourself before heading to the markets like this. Don't be a crackhead like me. All right, trading use. I used to do that a lot in the past, and it was a bit successful, but it is a dangerous game and risky one. Just make sure you only do it on a super small capital, or you're doing it on challenges because just don't give a fuck. But in order to not give a fuck, you need to be at the you need to have a certain security, right? Certain financial security, and you need to have a certain experience, because you need to have that confidence to really to play out these trades. What did I tell you? Second sip right here, but there's not much structure. But yeah, there's possibly a short opportunity here. But like I said, I'm gonna eat. Quick video, quick gamble. All right, is it really a gamble? If you exactly knew what's going on, maybe, maybe not. I mean, yeah, like I said, news are just setup accelerators. If you know, if you read price quite well, if you know where the liquidities are, you're likely to predict where the news move is gonna go. It's been a pleasure, boys. Thank you for watching, and I'll see you on the next one. Peace out.